This is Jay Martin.
All right, here I am with Kevin Bullock. Kevin, it's great to meet you and great to get you on the program.
It's awesome to be here at this exciting time.
So look, there's tons of stuff I want to talk to you about right now. But here's where I'd like to get started. I want to get your take. You know, you've been in the industry for like 35 years. You've had senior positions at some of the biggest mining companies in the world, like NexGold and Kirkland Lake. You also founded Volta Resources, took that to sale to B2 Gold in 2013. So, you know, you've been around the block, man, good markets and bad. And I just want to start by getting your take on today's gold market. Like, how would you grade the health of today's gold and gold equity market, investor sentiment, price action, all this stuff? What are you paying attention to?
Jay, I don't think I've seen another time where things are aligned so well. In other words, the events that are happening around the world, geopolitical, financial, trade, are all very, very scary, but very good for gold. And it's a store of wealth and a hedge against inflation, and a safety place to put. So gold itself as a physical metal is doing better than it ever has, and of course it's at an all-time high as we speak. That pulls people in to different markets that have to do with gold, and it usually filters down from the seniors to the mid-tiers to the juniors to the micro-juniors, kind of in that way. And we're at a point in time where we're so aligned with the gold price being high, the eyes on that gold market coming down to our kind of level of company market cap. So investment, you've got governments who are now, one of the silver linings of a Trump administration for Canada is, we need to get off our feet and get things done and start creating our own mining and projects. So governments and regulators are starting to really press forward and say, let's get these projects going and let's have some growth and development. So all those things being aligned, and having a project in our case, whereby it's nearly permitted. Never had a situation in it's 40 years now, by the way, unfortunately, but never had so many things aligned all at once, ready to go into a final investment decision. So it's very exciting times for us, and the market is best I've ever seen.
Yeah, I want to get into that final investment decision. So before we do, I would say it's funny. Investors are always impatient, right? Like the companies they're watching can never rise fast enough. If I were to step back, and I do, and review how this gold market has unfolded, it strikes me as incredibly textbook. We can go back a couple of years and see the physical gold price begin to rally, bought up by central banks, begin to approach and then hit all-time highs. And shortly thereafter, the best-in-class majors followed suit. And shortly thereafter, smaller majors and the best-in-class mid-tiers. And it's been a very logical and sequential trickle of capital. And if we look at the earlier stage companies now, it's like the best-in-class unfunded developers are getting a bit of appreciation, or they seem to be about to be. The odd exploration play, if they have a world-class asset or a world-class management team, but beneath that, not quite yet. And that strikes me as like a very healthy market, because either companies with strong cash flows, like the major producers, or companies with legitimately strong prospects are getting rewarded. But there's no easy money yet. And that's an ideal market. From my perspective, what do you think about that?
Well, I think, the easy money, once you think it's time for the easy money, it's probably too late. It's now is the time before everybody agrees it's the easy money, because that's when things have started to, have gone beyond their initial pop. And I think things have based. We've seen some basing in our company and in other juniors where you're basing for long periods. And when you look at the technical charts, the longer that base, the higher the pop. So when it does happen, but it happens very, very quickly in these types of markets. So you've got impatient investors that finally end up, either getting out or waiting too long or whatever. And then all of a sudden there's interest in the company. And those two things combined make your stock pop and come to a level that, quite honestly, most CEOs that have real projects think they should be at, which is much higher than we're at today.
Yeah. Okay, I like that. So reason I wanted to get you on the program today is because I think Canada is becoming a good jurisdiction again. New administration, maybe they didn't get my vote, but they're doing the right things when it comes to permitting, right? Like we're seeing I believe correct actions being taken in that regard. You've got two projects, both in Canada. Say what you like about the government. It's a predictable government, right? There's not nationalization crises here. And I think investors are rightly more concerned about jurisdiction globally today than they have been for the last 15 years. You got to look at Canada, Australia, US, countries like this for a bit of that security. You have two projects in Canada, Northern Ontario and Nova Scotia. And it's been an interesting company to watch because you've been developing each of these assets like two cars on the same racetrack, right? Developing each slowly and incrementally until one eventually, I imagine, is going to pull ahead because there's about 3 million ounces of gold resource on each. They're very comparable, right? Maybe I'll let you explain the project a little bit, but it's a fun one to look at because of how parallel these two projects are and how you're racing them both down the track. And eventually, I'm sure you're going to bet on one of these horses quite large. So walk us through that.
Yeah, so the benefit of this is we do have two cars in the race, not one. And they're both going to finish the race, but one's going to finish first. That hasn't been decided yet. So, we're still working on the components that make that decision. And that decision is a board decision based on our recommendations, management recommendations to the board. And we're not there yet. We're not ready to do that yet because, as you said, both projects are very, very close in value. They're moving along for different reasons. But they're basically, they're in the race together and kind of drafting off each other at the moment to help us in the overall race. So, one of these will be decided on in the future based on the merits of the project and the timing, and the things that make things work and get to that point. The major things are permitting. So Canada was a place that, as you said earlier, it seems that Canada is getting better. What it used to be is, it takes so long to get permits. IBAs, so agreements with First Nations, and financing. And financing kind of depends on the first two. So, as we've done in our projects, we've already got several permits on each project. On one of our properties, we've got an IBA already signed, and we're negotiating on the other property. So we're really advanced in a great jurisdiction that has a new direction now, federally and provincially in both provinces that we're in, of getting projects built and wanting to build it. And we've seen positive change in the governments in both provinces and the regulators in trying to move and help move things forward, which is quite a nice thing to see. So the alignment of getting a project built is there. So we're moving both these cars forward until one does step on the gas more than the other.
Till one looks like the smartest first bet, I guess, right? So, I want to pick both these cars apart. So you mentioned access to capital. I state to my audience all the time, often the most important resource in the junior resource industry isn't what's in the ground, it's what's in the treasury, right? Cash is the most important resource. NexGold is a Frank Juster-backed company, which just means you've got some of the smartest capital and deepest pockets behind you. I love that. And I often start there because I want to know with absolute certainty that we're in a good market now, so it's a bit different. But good markets are bad. You can raise capital if you needed to. That's a very important question that every investor should ask any entrepreneur they're investing in. And, you've got a positive answer to that question. So let's break it down. You got the two cars. Let's start with Goliath, Northwestern Ontario, I believe presently completing a feasibility study right now. Correct me if I'm wrong, but walk us through Northwestern Ontario, the Goliath project.
Yeah, that's correct. So a large land position and a very healthy and well-endowed geological belt within an area of all kinds of production in Northwestern Ontario. And, the biggest asset, I believe, of Goliath project is its infrastructure. It's right on the Trans-Canada Highway. There's rail. It's right near Dryden, 7 kilometers away, where there's a workforce. It's got a highway running through it, power lines, rail. So that infrastructure, that's already there. It's not the same as something being in the middle of nowhere. So that's to start. Then the deposits themselves, up to 3 million ounces of gold in resource and over 1 million ounces in reserve. I mean, that's with that type of infrastructure, starts to look like quite a good deposit. They add the price of gold to where it's at now, and you're talking about a huge value in Goliath that we want to move forward. So it's already got its its federal environmental permit in hand. We're through many phases of negotiations with First Nations to move towards an IBA agreement. And we're working on a feasibility, a full definitive feasibility study that should be done in the next, several weeks. Maybe it's going to be 4 to 6 weeks from now that's completed. So you'll have a technical study that shows the value of the project. And I can tell you that costs have gone up, but gold has gone up more. So the delta on profitability has increased. And we've got the definitive feasibility study going and working on the permits. So that's where that asset is. It also has a lot of upside potential on exploration around and on strike and brownfields and greenfields in the same area for growth in the future as well.
Okay, so Goliath in northwestern Ontario, you talked about the resource around 3 million ounces, and I believe like 2.1 in the M&I category, measured and indicated. Is that right? And 1 million ounces in the reserve.
In reserve, so, pre-fee. So we'll see what
pre-feasibility. Yes, great point.
That could change, but yeah.
So, for my commodity university students, remember, when we're looking at the resource, we're talking geology. When we're looking at the reserve, we're talking economics, right? That's the economic rock. So that's the key number we want to pay attention to with this story right now. Okay. And then the upside for Goliath is the access to infrastructure. You mentioned you got rail, you got highway, you got power built in. You're close to civilization. That obviously helps from a cost standpoint.
Absolutely. I mean, it's amazing at the value of infrastructure. Because infrastructure is the CapEx, right? So
yes, okay. And near-term news flow, what's next is like right around the corner, September, October. Definitive feasibility. We should expect that.
Is the feasibility study? Yeah. So that's what we're all waiting for, and things are moving along. So that's going to be quite exciting in this type of environment. And the numbers that we can use for long-term price of gold now, they're up in the $2,500, $2,600, $2,700 an ounce. People are putting these out at. So the delta between costs and that type of price of gold, it's quite incredible what the NPVs and IRRs can look like on these types of projects now.
So we'll have to wait for the feasibility. But at present, it looks like, or at least pre-feasibility, was looking at around 100,000 ounces per year in production. Was that the estimate?
Correct.
Yeah.
So that'll be that's not going to change because the throughput's the same. But I think you'll see change is the economics behind it.
Is the economics. Okay. Yes. Good clarity. Thank you for that. So let's go down over to Nova Scotia, your second car in the race. This is Goldboro. I believe the majority of your news this summer, it was focused on Goldboro. Drill results came up pretty steadily through all of July and August.
Yeah, I think that's because we chose to do an infill drill program to de-risk the ore body. The ore body is a little more complex in Goldboro than it is in Goliath, so it needed more infill drilling to de-risk it. So we did a 25,000 meter infill drill program. So it wasn't that we were concentrating on one or the other. It's that program just generated a lot of news that came out in several press releases during that infill campaign. And what it showed, they were very positive results throughout. It showed that we have indeed performed what we wanted to, and that's de-risk the project by showing that it is continuous between the drill holes in a lot of cases, and that's the news flow that's been happening. But the biggest news happened yesterday. We were in Halifax at an event to receive the industrial approval, which is the last major provincial permit that's required for the Goldboro deposit. So we still have federal permits to go, but the last provincial permit. One of the things I do want to say, though, is that as far as technical studies go, we have an older feasibility study from 2021 that we have to update. So we have an updated feasibility study that we have to do. So to get that done, in order to make a final investment decision, it requires taking all that new drilling I just talked about, putting it into new wireframing and into a new resource, and then using that new resource to design a mine plan around to come up with a new feasibility study. So that's where this car kind of falls behind and drafts a little bit behind Goliath, is the technical studies behind. And then it pulls ahead and Goliath drafts because we're further ahead with permitting at Goldboro. And they're doing that car race. So So we'll see what happens overall, but it's exciting to have both these projects like that. And we can't wait to come up with a new resource and get that into a feasibility study at Goldboro. That study won't be available till probably Q1 of next year.
Okay, yeah, you read my mind on that question. Okay, and remarkably similarity, at least with the previous, I guess the 2021 feasibility numbers, because it's another 3 million ounce resource with, in this case, 2.5 million ounces in the measured and indicated, so the two higher confidence categories, and a million ounce reserve. Is that correct?
Correct. I think it's 1.7 in measured and indicated. I'm not sure, but
1.7. But okay, all right. So I might have my numbers wrong there, but okay.
The reserve is 1.1 million ounces.
The reserve is 1.1. Okay. And then once again, just I love shouting out for my Commodity University students when Kevin's talking about the infill drilling program he completed this summer. Remember, when we're trying to understand how far a deposit goes, that's when we're doing the step out drilling to determine where is the edge of this thing. But when we want to learn more about the continuity of the grade and the width, infill drilling dips back into the ore body that we know about to learn more about it, get more context, make better decisions, all that stuff. All right. I appreciate that. So next big news event. Okay. So provincially permitted as of yesterday. That's right. August 27th, provincially, you can tick that box now, correct?
The major permits. I mean, there'll be the normal permits that when you build something like septic and all that kind of stuff that you would do with any project anywhere in any community, but the major permits for mining, provincially we're there. We still have federal permits to receive. So that's the Schedule 2 amendment, which we've received, and then the Fisheries Act authorization, which is usually a 90-day consultation period after the Schedule 2 amendment. So that we're in that period right now.
Okay, solid. And again, I guess 2021 fees showed around, remarkably similar, around 100,000 ounces per year also for Goldboro and Nova Scotia, correct?
Correct, 100,000 ounces a year for 11 years. Yeah.
For 11 years. Yeah. It's amazing how parallel these two assets are. Okay. So the $1 million question is, what do you need to see, Kevin, to make the decision? Because I believe you want to make a construction decision this year. Is that accurate? Is that a fair assumption that I'm making?
I think we need to make a decision within the next 6 months. Possibly this year. So in order to move forward, right, and continue and get into the detailed engineering and other things of a project that you can't do for both projects at the same time. So we do want to make that decision, but we're not going to make it before we're ready with the information required, at least enough of it to make a decision. And there's project finance and there's an investment decision, but then there's financeability. So a project can be something that looks good, but maybe it's not financeable because other people don't look at it or what. So that financeability has to happen, and whichever project has that financeability is the one that's going to move forward. So we have to look at all those aspects to make a decision. And in finance talks and for project finance and things like that, those play a part in. Think of the finance talks as the fuel at the pit stop, right? Who's gonna fuel which one the most, right? And move it forward. So those things come into play over time too. So it's permitting, it's financeability, it's technical aspects, technical reports that fall into that. So that's what we need is those things to all combine and look like it's moving better in one or faster in one than the other.
Okay. And you'll get some of that information in October when the definitive feasibility for Goliath comes out. You'll get some more of that information, I suppose, Q1 when the updated feasibility for Goldboro comes out. So, I mean, I guess what I'm getting at is, and I just want to understand this process. I'm really curious, again, how you're going to make this decision. Do you expect you're going to wait for that updated feasibility? Like, is that going to help you determine which one of these two projects is more financeable first? Do you think you'll wait for that news?
I don't think so. I mean, we'll have indicators when the new resource is put together, which is sooner than the feasibility be created, saying it is what we thought it was, and therefore, we can count on that coming as value, and certain other things that need to fit in, like a line on capital costs, how much they've increased or made, but it doesn't need to be a complete document to make that decision, a completed document.
Yeah. Okay.
So it's going to be somewhere along the way where one stands out more than the other.
Could I ask you for an estimated date for the updated mineral resource for Goldboro?
No, I can't give you that because it's based on the information I just said, and it will come when it comes, and some of it's permitting related, and those aren't our timelines. So as we find more, as we go forward and find more, there'll be a point in time that we believe will be this year where we make the decision.
Okay. Well, stay tuned on the news flow, guys, because you'll want to see that when it comes out. So let's step back and look at the grander vision a little bit. Unless before we do, Kevin, if you think I missed anything that we should cover today on either Goldboro or Goliath, anything else you want to add on those two assets before we take a look at the bigger picture?
No, just that we spent a lot of time talking about which one will go first, but leading into the big picture, segue into it is both of them will go at some point, and that's the whole strategy of the company, is to build a pipeline of projects whereby we have one being built, one being permitted to be built after that with the same team that moves to the next one, and an M&A strategy that's looking for others in the pipeline. And that's Frank Justra's vision for building the next mid-tier was, hey, do you need to go out and find a 500,000 ounce a year project that is probably not financeable by a junior and put all your eggs in one basket? Or do you want to build 500,000 ounce a year projects and become a 500,000 ounce a year mid-tier? Nobody's looking at that. Not nobody, but very few companies are looking at doing these smaller ones that are kind of underloved by majors, too small for them to move the needle, too big for micro juniors. So there's this, and who could take these and build one after the other and become the next mid tier, and that's what NexGold's set up to do.
To become the next mid-tier. And you're right on that lip. We just covered 200,000 ounces of production in the sites right now. And that buy and build model, that's how Frank Justra kind of built his career in this industry, right? That's been the strategy. Exactly.
And this one is more of a, this is the time to do it with smaller projects and move them forward in good jurisdictions.
So that's the bigger vision, buy and build. We've got two assets right now. One will move to production first. They both will move to production, moving NexGold into the mid-tier producer category. And then you've got the same team tried and tested on two assets that you're going to take on the M&A trail and look for, Correct. Keep hunting down next opportunity. Right.
Correct. Okay. It's the pipeline of projects that creates the value as you move them forward along the Lassonde curve.
Yeah. Okay. Couple just data points I want to cover off here. Walk me through your cash position at present, Kevin.
So at present, we've got about $6 million in the kitty.
Okay. Any intentions to go back to the market in 2025?
No, we don't have any intentions to. We're working on a number of financing options that are non-dilutive to the equity. And that doesn't mean that we won't, should the timing be right. We've seen a significant increase in our share price and volume over the last few days. That doesn't mean, if there's an offer presented to us that looks very, very promising and sound, that we wouldn't take it, because we do need a majority of, not a majority, but we need a equity financing at some point to go along with a debt for the project facility. And we're talking about projects that are probably around the 400 million mark Canadian to build. So at a 3-to-1 debt to equity, you're going to have to raise $100 million in equity, or equity like non-debt. So, yes. Obviously, as you go along, if you've got people that are that interested and there's offers made, you take that, especially if it's at higher prices than previous financings.
Yeah. Okay. So to hit the 400 million capex, you need 100 million in the treasury in order to borrow the 300 and get the job done.
You're correct.
Yeah. Appreciate that. Okay. This has been great. Are we through results? We're not through results yet for Goldboro. Last results came out on August 20th, but can investors expect more news flow from this project?
Yeah, the news flow is going to be the new resource coming out, further federal permits. And then at Goliath, it's going to be more further permits and IBAs and the feasibility study. Okay. Feasibility. News and a lot of advancements going forward. And we're very excited about the future of the company.
Yeah, no doubt. I imagine the energy is pretty high right now in the NexGold office. So congratulations.
Yeah. Thank you.
and the market looks ripe for you guys. So we'll look forward to the definitive feasibility on Goliath. We'll look forward to the new MRE on Goldboro, and more material developments coming, federal permits for Goldboro, lots going on. I'm excited to watch this. Let us know what you think in the comments, guys. I'd love to get your thoughts on this story. Kevin, it's been a pleasure chatting to you. So thanks so much for coming on today.
Thanks very much, Jay.
Yeah. Well, we'll have to do it again, like mid-fall, and get an update after there's some more material stuff in the newsfeed.
Sounds like a plan. Looking forward to it.
All right.